taking a look at the charts, we got some more price action going on today. I want to just quickly recap our afternoon update that we sent out last night, just to kind of give you a visual of what's going on. So we talked about in pre-market yesterday, this is the 30-minute chart of the SP 500. We talked about before the market opened, we were expecting a big gap up, probably see the market push higher in the morning as FOMO piles in. Everybody chases the markets higher, which we have our FOMO indicator here based on volume flows. And then we would see it fade back down and fill most of this big gap. Gaps tend to get filled, especially when they're on news. And a lot of it, I think, had to do with Trump and the tariff comments, that tariffs might not be as big as people thought. So we saw not only FOMO, we saw a gap, and it was a news-driven move. And of course, that had a little bit of carryover and sell-off. So that was pretty much what we expected. Overall, then we take a look at where we are yesterday after the close, and I still believe we are in this stage 3 topping phase, which is camouflage. Most people don't see it. They don't understand the risks and what's going on underneath the hood of the markets, meaning a lot of things are very weak and kind of not performing very well. Yet everybody's piling into growth stocks. They don't realize the momentum underneath the market is really stalling out. And if we take a look at our hot list, these are the top performers yesterday. Pretty much everything on here is aggressive assets, fast moving. Typically, this gets the active traders and the general public all excited. So it's all the ARK ETFs, blockchain, semiconductors, Bitcoin, autonomous vehicles, AI, all that stuff, lithium. They're all in there moving up. And when everybody's piling into those, yet the market is really weak, it means we're in this complacency stage, which I shared in the update. Complacency means people think we're starting a new major bull market, and they're piling into the most volatile and the aggressive stocks, only to probably end up purchasing them near the highs. And then we go into a stage 4 decline this year, which we've been talking about for a while. And then, of course, these stocks will probably drop 50 to 80 or 95%, a lot of these, in the next major financial reset. And then if we kind of scroll down a little bit more, we are in this phase. We have been seeing lots of distribution selling going on over the past year. So we're not seeing it all the time, but we're seeing waves of big institutions, funds, unloading their portfolios. And I wanted to show yesterday's price action. The SP 500 was up almost 0.6%. And this top chart is the SP 500. It's had a little pullback. It's only down about 2.25% from the highs. And that's because a lot of the big tech, the masses keep piling into the big tech holding this index up, versus SPYD, which is the high yield dividend stocks in the SP 500. It's down almost 10%. And this is where these high yield dividend stocks, this is where most investors and advisors have all of their investors' money. And so we have been seeing money moving out of portfolios. I read a stat about almost majority of the money in the US stock market is from people of 50 years of 50 age up, and they all own the same stuff, which are high yield dividend stocks. They want the big blue chips, the big boring high dividend paying stocks. And when they all start to sell, we see this start to move down. So people are unloading their portfolios, yet the more aggressive traders who don't look that far into the future are still piling into the growth stuff because they think a new bull market is starting. So we got this big divergence, SP 500, NASDAQ holding up, but the big investments where advisors and funds have their money is definitely unloading, and we're seeing big bouts of selling. And it was down almost 1% yesterday, while the stock market was sharply higher in general. So this is not a good sign. This looks like a tight bear flag, and we could see dividend stocks continue to fall. And I did a video on this a little while ago. I can see if I can dig that up again, or maybe I'll just do another one showing the dangers of dividend stocks. People don't realize how much risk there is. You're going to lose a lot more holding dividend stocks than you will if you just hold the SP 500. All right, so let's jump into the charts real quick here. Let's take a look at the markets. We have the Russell, the Dow, the SP 500 all slightly positive. The NASDAQ is relatively flat or slightly negative. And money is flowing into gold. We're seeing some fear in the market. Gold is moving up. The dollar is moving down. and oil is up a little bit this morning. So we are very close. Yesterday, we actually had the markets flirting with a new trend signal kicking in. The SP 500 gave us an exit signal. We got in, we hit some targets, we moved out. Same with the NASDAQ. We got in, we hit a target, we hit our next 10% target a few weeks ago, moved out of it. And so this market is trying to figure out, is it going to start a bigger correction or is it going to start another leg up? And that's what we need to kind of wait and see. Nobody knows where the markets are going, so we just need a strategy to follow the markets as close as possible. If we were to take a look at seasonality-wise, January on average is very choppy. It's all over the place. Typically where January closes, positive or negative, is how the rest of the year plays out. So if it closes positive, we should see a positive year. We have seen the market move very similar to this chart pattern over the past couple of years throughout the year. So it'll be very interesting. We're in this consolidation phase, and who knows what's going to happen when Trump gets in. There could be a ton of selling, there could be a ton of buying. And right now, the markets, when it has these pauses, we are on the sidelines in a different asset, letting the markets mature until we get a new signal so we can try and catch some of these larger trends in the markets and take advantage of those. So if we go and take a look, let's jump over to gold real quick here. Gold's up 1%. Let's get rid of some of these charts. If we take a look at gold, gold continues to consolidate. It has hit our 100% measured move, meaning gold's had a rally, a pause, a rally, a pause, a rally, a pause. I do feel if the stock market wants to put in a top here, that I think we're going to see potentially gold want to work itself back up to these highs or maybe even a little bit higher. Some people are talking about 3,000. It could have another little leg up, but overall it's hit our 100% measured move. And check this out. If we take a look at the monthly chart for gold, the SP 500 and Bitcoin, you'll see some pretty interesting price action here. So if we look at gold from a long-term monthly standpoint from the start of the last major super cycle, the high in 2011, the low in 2015, carry that forward. You can see we came up to this measured move. I talked about right over here when we broke out into the next bull market for gold, we said, okay, this is the next target, this 2100 level. If we pause there, we're probably going to go up to that 100% level. And that's what we did. 1 equals 100%. And we closed out our GLD position up in this area with our band strategy. Beautiful trade. And that's just telling us we're most likely going to see gold have some type of pause or correction, very similar to what happened over here. We had the pause, and then we had the run up before the 2008 financial crisis, and then we saw gold get hit and pull back. And this opportunity here is where gold miners are going to come to life. I believe we're going to have that hopefully this year at some point. Gold, silver miners will come to life, and then it's like off to the moon for the whole space, which people have been really waiting for a long time for this. Now check this out. Here's the SPY. This is a lot of people don't pick up on this, but it's nice to always step back and look at the bigger picture. If we do Fibonacci from this major standout low, COVID low, to the high, 2022, where we had the little bear market, and go to the low, you can see we are pretty much right at this 100% measured move. Maybe the market wants to push a little bit higher, but the majority of this move is done. We've got the rally, we got the pullback, we got the 618, a little hiccup and pause, and then boom, we've got that 100% measured move. So there might be a little bit left, but again, the majority of the move, same with gold, is done. And if we do the same with Bitcoin, this is Bitcoin, we really nailed it as well. This was a very short-term speculative trade, but again, same thing. When we use Fibonacci extension, we can take the standout low, we can use this major high and this low and carry that forward. And we hit our targets. We got into the Bitcoin trade right over here. We hit our first target, sold half of our position here, and we sold the rest right at 107.8, just below the high. And now it's taking a pause or breather. So again, another measured move. It's ran up, pulled back, and hit its targets. There was a hiccup here for about a week or so. On the daily chart, the monthly chart doesn't quite show it, but overall it's hit our 100% measured move. We're out. The majority of that move is done. Now we let all these charts kind of work themselves out, set up a new pattern, and we can take advantage of those. So stepping back to these big views really gives us clarity on the overall bias. Is it a rising tide, a falling tide environment, a bullish, bearish? And then we can take advantage of it with the shorter term charts. Other than that, I think that's about it for this morning. We'll see how things unfold. Let's take a quick look over at the dollar. If we take a look at the dollar, Trump came out talking about tariffs might not be quite as bad as he thought or we thought. And so the dollar's pulled back. It has pulled right back down into a bit of a support zone. So we've got this high, this wick high over here. We got all this consolidation through here. So it is settling down into this area. Also the pink line, which is the 20-day moving average. And so we'll see if it can get some traction and move higher. Again, I'm very bullish on the dollar. I think the dollar is going to continue to go up to 116, 123, and really take off. But overall, the stock market, if it kicks back into an uptrend here, I think the equities market will be another play. I think there's potential with even the NASDAQ for about 11% upside move in this market. If we were to just look at this last major standout low and the standout high, and we come down to this low, this will tell us where this next upside target will be. And if we squish this chart down for the NASDAQ, you can see here we've got this major rally, major correction in August, and then we've come up, and now we got the 618 pause, and then we could go up to this 100% measured move, which is about 11% to the upside. This could be seen as a little bull flag, a consolidation before extending up higher. And so again, it doesn't matter what we think the markets are going to do. If they want to start a new uptrend, we move into the equities market, we catch the next leg up. And then of course, when it starts to correct, we step aside, move into something else that goes up in value as the stock market figures itself out. So we're constantly ratcheting ourselves higher, our portfolios. Anyways, that's it for now. Talk to you soon. Bye-bye.